Alright, Trader Zone, this could be a quick video. This is the way that a rule that I used to have. I don't really do it too much anymore, Trader Zone, about, I used to. I'm a little bit more experienced now, so I know you have a lot of experience as well. I don't do it as much as I used to, but what I used to use for chop, is to help me stay out of a lot of chop was, for one, I don't trade on Fed Day. It's notoriously choppy, and two, see these ticks right here? See, I have 600 for high and I have a 600 for low. If the market doesn't stay in between them two brackets without having a tick above 600 or a tick below 600, then it's probably choppy, and I would like not play the market. So as you remember, you said you took a few couple bad trades, and if you think about it, the market didn't break out until 10:20. Look at the time here. That's just 10:20. What do you know? 10:20 is the time when it broke out of this bracket, and then you had a nice uptrend. So if you could just sit there and watch this, you can avoid some chop. Now there's gonna be days you're gonna miss moves because this thing doesn't hit plus or minus 600. But all in all, it'll be better to stay out of this because this is psychological damage than to catch a move once or twice a week or something. So that's my rule. That's used to be my rule, and I still use it to this day. I would just watch and say, okay, market looks super choppy, and it's not. I don't have a plus 600 tick reading or below 600 tick reading, and I'm talking about dollar sign TICK tick. This is the difference between stocks that are going up and down. So for from 9:30 to 10:20, there wasn't one point in the market where the market was going. There was more stocks, 600 more stocks going up than going down. That's pretty choppy. I mean, that's kind of common sense when you think about it. That's pretty choppy. And from the look of this, I didn't trade today, but from the look of this mess, it was choppy. And even if I use my Fibonacci's and I go here, uptrend, right? Boom, it broke it. So now I'm going to go to a downtrend. Then I'm going to flip it to a downtrend and broke it. So now I flip to an uptrend. And I could even go from here to here and go from an uptrend. And then, bam, it broke it. So now I flip to a downtrend. You understand what I'm saying? Like, that is just a choppy mess. I mean, I wouldn't want any part of that. And the ticks told you. The ticks telegraphed it. This is not hindsight, anything. Like, the ticks actually told you before that this market's going to be choppy. Not one tick above plus 600 or below 600 until 10:20, and then that's when it broke out, and that's when it had a nice run up. So you could do the math, and that's just a tool that I use, and you could start using it. You could start noticing. Just go back and back test it for a couple of days, and just look and say how choppy was the market. And this is, I only do this for the beginning. After I look at it from the beginning of the market. So once it crossed 600 and or either or, then it's open season as far as what you want to do trading wise. But just think about it. For the first 9:30 to 10:20, the market was choppy and ticks was choppy. It mimicked the market until it broke 600. That's when the market opened up a little bit. So it's just a tool that I use, um, that helps a lot. So that's what I use sometime. I mean, I still use it to this day. I don't use it as much. I used to have strict rules for that. Now I don't. Like I said, I'm a little bit more experienced, but today was a prime example where that rule would have paid you in spades because you would have like avoided all this, and you probably would have. You play pullback, so you probably would have caught this, and maybe caught this area because these are pretty simple, easy pullbacks. So you probably would have caught two nice, decent trades. But I hope that helps because I do use this not as much as I used to. Um, but I do look at it every day, and it ticks. I do look at ticks. So hope this helps. Let me know.